Good morning, traders, and welcome to the market forecast for Thursday, November the 19th. I'm John Hoagland. Thanks for trusting me with your time. Looking like an interesting trading day in some of our markets already. We saw a pretty decent opportunity in gold. We're going to take a look at that shortly as we look at these markets in context through the lens of risk management. Good morning. Good morning. If you attended the market forecast, the market therapy last night, hopefully you enjoyed it and took some information out of it. The previous market therapy session should be on our YouTube channel sometime today in its entirety. We'll look forward to seeing that. And 2 more weeks, we'll have another session. We're looking forward to having another very interesting and hopefully helpful topic for you. As far as economic numbers this morning, we did have the jobless claims come out as well as the Philly Fed. Now, the jobless claims, I'm thinking, are being viewed as negative. The initial jobless claims was considerably more than expected. They were looking for 707,000. It was 742,000. It also included an adjustment to last week's to the upside in the initial jobless claims, as well as the continuing jobless claims. They adjusted last week's higher, but this week's continuing jobless claims a little bit lower than expected. As far as the Philly Fed, already out this morning, they were looking for 22. It came out much better at 26.3, so possibly some good news for the manufacturing sector. We still have existing home sales at 9 o'clock Central and 9:30 Central, the nat gas numbers due out. We do also have a number of note and bill announcements and auctions throughout the day. No idea how or if those are going to necessarily affect our markets. So really just kind of looking at what's going on in the markets this morning. You know, the S&Ps, our U.S. equities have been hanging just below all-time highs, made new all-time highs last Monday in the overnight session. I've been looking for that to get taken out in the regular trading hour session, but with the lack of stimulus, rising COVID infections, looming lockdowns, it just seems a matter of time until the markets start to price in that risk. Now, we're not seeing necessarily risk increasing as far as VIX is concerned. VIX is pretty much just steady today, right around 23.72 the last time I checked. So, the downturn that I think we're seeing in the equities isn't viewed as a threat to risk on investments here just yet. Who knows? It's a matter of time. We're going to take a look shortly. As far as crude prices, they've slipped back below that weekly kickoff high. There's some rumors of dissent between the UAE, the United Arab Emirates, and OPEC. Apparently, the UAE threatening to break apart from that and abandon the OPEC production cuts that are currently in place that they've been talking about, and we haven't really had any clarity from OPEC Plus as to what their expectations are for 2021 as far as production is concerned. So we are going to be, as always, trading what we see. So important to do so. The dollar index is up just a little bit today at 92.63. Make sure you like, share, comment, question, feedback, and heckle at will. I do enjoy a good heckling. You can also subscribe to our YouTube channel so that you can be notified when we do go live. We are bringing more and more live content to you, and hopefully much more in the new year, which, wow, is really, we're talking about 6 weeks away. It's Thanksgiving week next week. Speaking of which, we will not be having the forecast or the recap the week of Thanksgiving. Monday, Tuesday, Wednesday are perfectly viable trading days, although you're probably going to see lower volume and lower liquidity. Thursday and Friday, just take the days off, have a nice long weekend. We'll be back in business the week after that. So I always do like to say good morning to everyone. Tanya, up early this morning. First one in the room, you win the prize, Tanya. Clarence, good morning. MSS Capital, I love this. It's another day we're going to be filled with either learning or earning. I think we're always learning, whether we're earning or not. There's something to learn from every day that we engage in these markets. Good morning, Charles, Nick Mo, Michael, Danielle, Andrea, Murph, Vast West, Vlad, Esteban, Felix. Good morning, Felix. Murph, good morning. Tanya was early today. Yep. Felix, you maybe logged in a little bit late. Give Tanya that chance to get in there early. Mike, good morning. John, Rob, Joshua, Brian, James, good to see you. Kevin, good to see you. Hopefully things are clearing up for you down there, Kevin. I know that you've had a rough go of it with the storms for the last couple of weeks. I'm glad to see you're with us and that you are safe. We are still praying for everybody in the wake of those storms. Murph, VIX is for S&P. Is there something for Nasdaq? Well, VIX I think is really just a kind of an overall pulse of the assumed volatility in the marketplace. So I look at VIX as useful for any of the equities products. Jason, Angelina Modestas. Good morning, Felix and Kevin. Yes, Kevin, blessings to you, blessings to all of us. Let's take a look at these markets now. I got my dog in there. She's a little bit crazy this morning. I think I need to get her outside. Surprised she's not talking to us. She does like to comment on the forecast once in a while, but you hang tight there, Lacey. We're going to get into the charts now. Okay. And as always, going from left to right, this is the crude daily. Okay, uncertain demand. Of course, it's uncertain. We don't know what lockdowns are coming, what's going to happen with COVID. Ambiguity from OPEC Plus on production is keeping price relatively range bound. There's about 52,000 contracts left in the December contract. We should be, of course, trading the January contract. That's where the volume is, but it's still blurring volume a little bit as to any directional activity we might be expecting to see in crude oil. We do see an 8,700 contract increase in open interest, but I'm thinking that's more of a function of the rollover as well as the blurriness in volume. So the addition of that open interest on an up day, on an attempted breakout above an important inflection level like this weekly kickoff high at 42.15 could be viewed as new buyers coming into this market, and if we can accept and attract more buyers above weekly kickoff high, those buyers are certainly going to get paid. When we take a look at the 30-minute chart here, the weekly kickoff high yesterday was, I would call it somewhat magnetic. It was resistant here. We spanned the weekly kickoff level several times and we ended up closing down below it. So this is, it was kind of looking at it this morning. There's no real overnight inventory where we basically opened back at settlement. So all of this activity has evened out as far as inventory is concerned. There is no gap, no overnight shorts. I'm going to suggest trying to stay patient. I'm going to be looking for opportunities in the kind of zone that is the market, that is the weekly kickoff here at 42.15 about. Okay, so I'm going to be looking possibly for opportunities there. I mean, it was resistant. It was magnetic yesterday. It's going to be somewhat pivotal for us today. In other words, short below, long above. Be careful with that, though, because you can get pretty considerably chopped up in that case. Okay, so again, we're right at settlement. We're kind of bordering on value. We're inside range from yesterday. Stay patient. I'm thinking there are going to be better trade locations for us, crude traders, as the day goes on. The E-mini S&P. Okay, well, we've been kind of looking for and waiting for the market to take out this all-time high that happened in the overnight a week ago, Monday. We've been unable to do so. It seems as though the upside auction began to struggle in the last couple of days, and then yesterday with the COVID fears leaking back into the marketplace, we closed back down below that weekly kickoff high of 35.75 even. It doesn't necessarily change the overall market state in the longer time frame. We've still put in a higher high. We haven't taken that out yet. Volume really just kind of maintaining. We lost 2,000, only 2,000 in open interest yesterday. For the past few days, we've been piling in increasing open interest on up days. That the fact that we only lost 2,000 in open interest yesterday might be indicating, at least to me, that the longs that have been adding to the open interest up here have not abandoned those positions yet. They're still holding tight in those positions, and it's going to be, I think, a pretty powerful move if we fail to hold weekly kickoff low or if we reaccept above weekly kickoff high. Stay patient, though. Again, always be thinking about staying patient. The 30-minute chart here. Okay, here is our move to the downside yesterday, taking us back below weekly kickoff high, resistant overnight, settlement all the way down here at 35.65 even. No real overnight inventory. There's the chance that we may open with a gap, but what speaks the loudest to me about this particular S&P chart is the fact that we kind of ranged for the better part of the day yesterday. What is concerning to me is this late move to the downside that caused settlement to close below that level. We're going to open below what we call a late spike. We're going to open below that late spike or within that late spike, which will probably be marking acceptance of lower prices. If that's the case, if we have a whole bunch of new longs that are currently, taking heat or getting close to taking heat from activities possibly getting longer here to hold this move above weekly kickoff high, we're looking at a potentially explosive or at least a bigger move today if we scare out some of these new longs up here. If we continue to bring in buyers up here, we'll see if we can attract more buyers above weekly kickoff high. I'm thinking, though, that a lot of our newer longs are going to start to sweat this out a little bit. For now, it seems they're hanging in there. Remember, if we do open with a gap, if we can't close that gap relatively early, yes, I understand that is a selective or a subjective term. What is closing the gap relatively early? Well, it's probably not going to be that substantial a gap. If we can't close that in the first hour, perhaps, then I think we may be really showing acceptance of lower prices. That may entice some of our longs that are currently holding losing positions and some of our longs that are currently about even in those positions to react and to make this and to have this market move in the downward direction. I've been looking for this market. I'll admit it. I've been waiting for this market to take out last Monday's extended trading hour high right up here. We've not been able to do so. So what we do and don't do can be equally as important in the decisions we make. Watch the gap, watch the opening range in the E-mini S&Ps for a possible execution early in the session. We open out of range, out of balance, below a late spike, it might indicate that we're going to need to respond relatively quickly. Tim G, what gap are you referring to? Here's a good example of a gap. Here's what is this? Today is Thursday, so this is Sunday. This is last Friday. Monday we opened outside of the range from Friday. This gap is what I'm talking about. These gaps tend to be weaknesses in structure. You can see the market ranged up here on Tuesday. This is the market went back and rechecked, closed that gap. It in the regular trading hours. Okay, this is what I'm talking about with gaps is regular trading hours, not overnight hours. The regular trading hour closed the gap that was created on Monday. On Tuesday, Early in the session, the market came down, closed that gap, and then continued to move higher. So if we do open with a gap below yesterday's range and we can't close that gap, that I think is going to attract more sellers. And I'm thinking some sellers that have a reason. They're holding losing positions. They're initiative sellers. If that is the case, nobody knows for sure, Tim G, what is going to happen. So there's a little bit of a look at what the gaps mean and how to trade them. Usually there's a kind of a gap rule. If we can't close the gap relatively early, we tend to try and trade in the direction of the gap. If we gap lower today in the S&Ps and we can't close that gap, kind of suffices to say we're going to look for opportunities in the downside direction. Okay, Nasdaq, still the weakest of the indices. So that's something new. It had been presenting as stronger. It is now presenting as weaker. The volume is a little bit higher on this move to the downside. We lost 1,000 in open interest. Not a big move. The downside volume is what I'm kind of looking at. We have been unable to accept above this trend line. We have been unable to accept above weekly kickoff high, which is 12,130. So what does that mean? Well, it kind of means to me that we're falling into short time frame control here in the Nasdaq. We're not seeing longer time frame buyers or sellers getting into the market at this level. I mean, we've seen some increases and a little bit of decrease now in open interest, but nothing that I would call shocking or notable. Take a look at the 30-minute chart. We're probably going to be looking for opportunities that are directly related to past opportunities. We do have that late spike again in the Nasdaq, and it looks like we are going to open with a gap, without a gap, not sure. We don't know yet. We've got 12 minutes before the regular trading hour open. No real overnight inventory. Settlement, just so you're aware of it, is at 11,894. If we open with a gap and can't close it, I think that may bring more initiative sellers into this market. But again, we don't know. I'm just looking to see where our opportunities might lie. If we open with a gap, we can't close it. There's only one thing for the market to do: range or become directional below that level. If we close the gap, it might give us opportunities back at settlement, perhaps at overnight high, perhaps at value low for opportunities for execution. I'm always looking for opportunities that are close to points of invalidation. If we're in short time frame control, the levels that short time frame traders look at might be very interesting. If we bring in longer time frame traders, those day time frame levels and ideas that day traders look for will be ignored, and it will be a sign that yes, we do have possibly longer, stronger money coming into the marketplace. Gold this morning, fascinating. Okay, the daily chart. We have been wrestling with this 1860 level for 1, 2, 3, 4, 5, 6. Today is day 7. Day 7 that we're wrestling with these numbers. The market opened right at or just above 1860, and as far as I know so far has left the opening range at the high of the regular trading hour session. Gold is heading into rollover. Next Monday, we will be looking at volume moving into the February contract, not the January contract. Monday, when you open up your dome, when you check the volume, you probably will be fine trading December until Tuesday, when you're going to want to move to the February contract. Again, double check volumes next week early if you are a gold trader. So we've got yet another test here of weekly kickoff low. Volume and open interest on the move toward the weekly kickoff low yesterday on better volume, losing approximately 4,000 in open interest. Interesting. We're seeing traders getting out in a range-bound activity. We accept below weekly kickoff low. That may change things. We've already taken a move in the regular trading hour session basically to these swing lows. We got, let's see here, that low is 1848, 1850. So we got within 20 ticks of this swing low. Let's take a look at the 30-minute and see what if we have taken out the high of the opening range, which we have not. So the market opened leaving the high of the opening range at 1861.60. Here's your gap, Tim. We opened with a gap between yesterday's regular trading hour session and today's regular trading hour session. We have taken that opening range, which is the first minute of the regular trading hour session, that's 720 to 721 in gold, and we have left that minute range at the extreme, at the high of the day, and against a weekly kickoff level, a more important level of inflection. The market kind of magnetic towards it last night. Settlement was all the way back up here at 1873.90. We've got plenty of overnight weaker hands shorts in this market, but it seems as though they've attracted sellers in regular trading hour, and those are more likely to be medium and longer time frame traders. Okay, so. Right now, with no gap close, with the high of the session at the high of the regular trading hour session, the high of the opening range, I'm looking for opportunities to sell. Look at what we just did here. I'm going to make this big so we can all see it. So the market opens, it trades all the way down to those swing lows, comes back almost to the beginning of the opening range, which, by the way, the beginning of the opening range is right at 1860. So the market comes back, gives us another opportunity for a possible execution near this important level, and it seems to be continuing to head to the downside. We don't know what's going to happen. Those swing lows are, $2 below this area here, okay, 1848, those swing lows might end up being somewhat supportive, but with the break of the low of the weekly kickoff, which has been tested several times, we do run the risk of bringing new sellers. Sometimes selling begets more selling. Keep your eyes on that. Opening range was important today in gold. The euro. All right. There's really just not a lot to talk about in this market. It's so centrally located between weekly kickoff high and weekly kickoff low. Volume just continues to get cut off because we are just kind of ranging here. There's almost no change in open interest last night. It seems as though this market has been forsaken for other opportunities, and maybe that's a good reason. There's not a lot of opportunity here, not a lot of interest in longer time frame traders. Again, we're centrally located, weekly kickoff low to weekly kickoff high, short time frame control, short time frame levels. 30-minute chart. Settlement all the way up here, 1869 and a half ticks. We've got some pretty substantial overnight shorts in this market, but because we're not near any longer time frame levels, I think there's probably a bigger chance that if we can't take out the low here, that we may see the opportunity for this market to come back up and close this gap. Again, it's going to happen relatively early for me to be able to respond to it. And then, of course, we always have the opportunity because all of our overnight activity was to the short side. Weaker hands, shorter time frame traders trading in the overnight, accumulating shorts. If we can't take out this overnight low, I'm going to be looking for a move back towards the overnight high or even back to settlement. And the Japanese yen, which we kind of called this move to the upside a couple of weeks ago as the market was struggling to continue to move lower. You could see how the volume was just falling off at this level. Well, when the auction starts to lose interest in one direction, it's likely to end and a new auction is going to continue. So do we have the opportunity for this market to continue and trade to points higher? Well, this is the daily chart. We're seeing higher lows. We're seeing higher highs. It's perfectly possible. Is it probable? possibly where we are right now. Look at where we're trading, 96.11. 96.10 is weekly kickoff. We broke out above it yesterday. We did add 2,200 in open interest. So there's still buying interested in coming into this market. And I'm going to be thinking in the day time frame today that we are going to possibly, if we are a new long in this market, try and protect this 96.10 weekly kickoff level. 30-minute chart. Settlement up here. Okay, we've got 96.34 and a half ticks. We did not open with a gap. As a matter of fact, the gap between day before yesterday and yesterday has now been filled in regular trading hour session. This is no longer a structural weakness. We're looking at opportunities near this weekly kickoff high. It's more of a range than a finite number, but it's trading right at it now. What do we do? Do we think that we're going to continue to move lower? Are we going to, are buyers that have been in this market recently going to protect this level and try and push this market higher? We have a little bit of overnight inventory to the short side. Are they going to bring price back up to settlement? All good questions. And this level is an important area for an execution. Okay, so, all right, we've got just a couple of minutes before the equity open. Looking forward to seeing a good trading day. We will be having the market recap today. Dan will be hosting the market recap. And then I'll be back again tomorrow morning for the market forecast. Again, no forecast or recap. Next week, we are preparing some good things to check out while we are out of the office. I'm recording some content, so you'll see that kind of coming out throughout the week next week. Have a good trading day today. I'm going to take my deep breath. I hope that you come with me. Have a great day. Stay humble, grateful, and creative. Thanks again if you attended the market therapy session with Dr. Menaker. I really think that that is such an important event in trading, is to have that time to talk to the good doctor and have him answer your questions. Looking forward to a good trading day today. Trade well, get out there, profit. We'll see you later on. Have a great day.